Hey, what's up, everybody? Welcome to another episode of Live with WSO. It is, let's see, May. Wow, it's already May. May 3rd. Happy birthday, Dad. Almost 2 o'clock Pacific, so about 5 Eastern. A little bit later today. Sorry about that. Got tied up with a bunch of stuff with the business. But happy to answer any questions. We are streaming live on Facebook, LinkedIn, YouTube, Twitter, and IG as well. How are you doing, Henry? I think it's Henry or Henry. How you doing? If you see me looking over here, it's because I got kind of split screens. I got Instagram here on my right, and I got most of the other people here, comments. I should be able to see comments coming in from LinkedIn and YouTube as well, straight into StreamYard. So yeah, basically the way these usually work is I'll come on here, answer any questions you guys or gals have on specific networking tips, interview tips, career, or whatnot. And so I'm happy to do the same thing today. If there are any questions, we may make it a somewhat shorter one because I do have another meeting in about half an hour. So I will do probably about 30-ish to 40 minutes. So yeah, we'll start off there. Any questions to get us kicked off? I can't really see, Amir, if we have any, or the number of streams we have coming in here. I see some comments coming in from Insta, but not much. All right, we got one from Enrique here. Enrique asks, how often do you see people jump from credit, like LevFin, to private equity? Is a jump from credit to IB more common? Are you, Enrique, are you talking about like direct lending side, or are you talking about like, it sounds like you're talking direct lending credit to private equity. I'd say credit to IB probably is more common. It's hard to get from credit to private equity simply because it's a less traditional path, and like a lot of the like the traditional mega funds and middle market funds are just pulling from specific groups at specific banks. Now, if you go down to like lower middle market private equity and middle market private equity, especially if they have like a credit arm, your background might be a little more interesting. So I think in those cases, you could make the jump. But again, it's going to be just like getting yourself into the actual interview processes is probably going to be your biggest challenge, because those are largely controlled by recruiters, and the recruiters have such a flood of candidates every single year coming into these banks that they just keep pulling from that same pool because it's easiest to present good candidates to private equity funds. So usually it's easier if you're trying to get into private equity to go through IB itself. So what I'll say is, like, you also don't want to, like, if you think, oh, an MBA is going to get me into private equity, you don't want to make the mistake of thinking that MBA is going to get you a shot at PE interviews. With the sense of, like, a lot of people think, oh, I went to a top MBA, now I can get into private equity. The problem is you're competing with all the kids who had pre-MBA private equity experience. So that's actually a pretty common mistake. I see they're like the private equity and VC club at like these top business schools is massive. And the number of people that actually land jobs in those industries is actually pretty small, since there just aren't that many seats. This is a great question. Hey, Joseph, thanks for joining today. As you see it, what are the pros and cons of OnCycle versus OffCycle private equity recruiting? What about participating in OnCycle first year versus second year? Thanks. So I've seen a lot of this. I am of the believer that if you can wait till your second year, I think you just become much more competitive. If you're in a pretty good group where you know there's going to be some deal flow in that first year, that just having that transaction experience and being able to speak to it tends to make you a more competitive candidate. Now, if you do have your ducks in a row, you are in a top group, and you are you've prepped, like, let's say you've taken our private equity interview course or one of our boot camps for private equity interviews, and like you're ready to go before OnCycle starts in your first year, then for sure you can go. And I think, the odds are still tough, but if you've prepped properly and you're at a decent group that tends to place pretty well, then I think your odds are going to be pretty good. I would highly recommend you watch or listen to a podcast I had on OnCycle private equity recruiting to really get a sense of the stress you'll be under and the type of questions you'll be asked, and then the decisions you'll have to make within a 24-hour period of like whether you leave a certain room or stick around at a firm. Like you could be put in a waiting room, the conference room, not told whether you're going to be eventually getting a final round offer. So you sometimes have to make a quick judgment during that weekend, or say during even the week, where you're trying to figure out, should I go? I have another opportunity to invest for another fund. If I leave, I lose this one, but I think I could do better on the next one, or I really want this other fund. So it's like a very condensed, insanely intense game theory-esque battle, like gauntlet that all these kids are put through. Unfortunately, they're put through it right after training, or very soon, either late summer or early fall, with almost 2 years prior to the start date. So it's a little bit insane in terms of how early it is. It doesn't serve anybody, but it's just the way things happen to fall, simply because that's the game theory points to that. People want to get the top candidates, so everyone has the incentive to move early. So we've even heard on the forums there for 2023 OnCycle, we've already heard in the forums that recruiters are reaching out. And so I've joked in the past that, like OnCycle recruiting, basically the end game is going to be when you get your investment banking offer, it'll be paired with like a private equity offer for, at the end of your junior summer, it'll be paired with like a private equity offer 3 years later. That's going to be like the end game. Or they'll interview you like while you're still in college for a job that's 3 years out. So like the pros OnCycle is that I still think the majority of the seats are given away, like 50 to 70% of the seats are given away OnCycle. So OffCycle tends to be a little bit less kind of seats and less seats at the top funds. I would prefer you go OnCycle second year if you're having doubts, but like you don't want to go OnCycle first year if you don't feel fully prepared, because it can hurt your ability to kind of try and go OnCycle again that second year. So you could definitely talk to recruiters, but again, I'd make sure like your story's straight, and you, if you are going to go, you're ready with the, be able to do the paper LBOs, you're able to do like private equity cases, you're able to talk about, what attracts you to private equity, why specific funds, all of those good questions. So that takes time and that takes practice. And I think, rushing it can be a mistake if you're not ready. Let's see what else we got here. It's a good question, Joseph. I could go on and on. Every year it's crazy how early it goes. Tony asks, what would you suggest to someone interested in private equity coming from investment advisory? Certifications, resume. Tony, again, like similar to what other people are saying, I think getting into banking is probably going to be your best bet. There's no certification, nothing you can put on your resume that's going to get you into these recruiting processes. What I will say is, like, before you go MBA, if you're trying to do like a reset for a career, don't think that like the MBA is going to give you a shot at that. It will give you a shot at banking if you're a career changer, but it won't get you a seat in a post MBA private equity role. So or very rarely it does. So if you are going to try and reset, the MBA is great for that, but you have to be realistic about like the types of roles it's really good at placing into. And it's typically, or for career changers, typically banks and consulting firms heavily recruit, and even corporate finance departments at larger Fortune 500 companies also love to pull from top MBAs. See what else we got here. From Longy over at YouTube, what are your thoughts on finance and PE Masters in Science degrees? Do you think they're useful? Or I think you mean MSF, useful long-term career in PE. That's in regard to breaking and building networks. I don't think they're that useful in terms of long-term for career for PE. I think what's more useful is just learning how to run a deal. So like from start to finish, understanding how to negotiate NDAs, looking at a QOB report, understanding how to run a diligence process, knowing how to speak with management, knowing what questions to ask in terms of trying to figure out if it's a good investment or not, and knowing what and trying to anticipate what the investment committee is going to ask you when you bring a deal to them. I think those are the skills that really matter. Obviously LBO modeling and being able to build a detailed underwriting model as well. But in terms of like degrees, it's going to be more about who you know and can you get into the processes? Can you get into a top bank that has the interviews? And if not, are you a good enough networker to actually get into any processes outside of that? And that's super hard and super rare. It's a little more common at like the senior associate VP level, where like, if you have more experience and you've done some, investing, long-term investing elsewhere, could potentially lead to that, but usually it's at one PE fund to another. Gavin asks, any advice for wanting to go from Big Four accounting valuation advisor to IB? How often does it happen? Hey, Gavin, happens a ton. So yes, this is a very, very common path, especially from valuation advisory, because a lot of the skill sets you're building at the Big Four are going to be similar to what the bankers are doing. How often does it happen? I would say it happened a lot in 2021 when the banks were desperate to get any analysts they could. So it was happening a lot back then, 2020, 2021, when deal flow was crazy high. Now, when we're hearing about layoffs every week, every other week, it's going to be much harder to lateral in from Big Four accounting. So what's going to make or break you isn't going to be, is really just going to be who you know and how can you get into processes, and then how well you interview. That's what I'd say. It happens historically. It's very common. So don't think you can't do it. It's just a really tough time right now. And so I don't want to get your hopes up thinking, oh yeah, it's super common and everyone does it. Because there's a lot of people in valuation advisory want to get to IB. So that's well known. And you can usually, with some good networking, you can get into some lateral processes. But that's lateral processes by definition are very like random in terms of timing. Like an analyst quits, suddenly a middle market or a lead boutique or a bulge bracket, suddenly they need a certain group needs an analyst. Guess, the VPs, the MDs, they usually just go to the analyst and be like, do you know anybody? Or the associates, do you know anybody that could come in, fill the seat? And so before even HR gets a job posted up or whatnot, sometimes there's interviews already happening right away. And if you know the analysts of that specific group and they kind of reach out and let you know that, hey, we just lost an analyst, someone just quit, whatnot, that's kind of your opportunity to kind of get into the process. And so that's why having such a broad network and actually putting in time into your network each and every week is so important, so that you're actually hearing about those non-posted lateral opportunities and job opportunities. Now, working on your network every week and building your relationship every week doesn't mean emailing your whole network every week. It means, touching base every say 3 to 6 months with the people you've touched base with and built up a relationship with over your college years and then first few years out of school. So, you should be networking with people at your firm, building relationships with people at your firm, but also at the other Big Fours, within the banks as much as you can. I know it's hard sometimes, the majority of them won't even take your call sometimes because they're so busy, but it doesn't mean you shouldn't try. What else is going on? Let's see. Asif asks, how do you navigate the shift from your sales and trading internship at a top BB and land a full-time IB in middle market and boutique? Okay, so for this, if you have, and so first things first, get the sales and trading, turn the sales and trading internship into a full-time offer. To land full-time IB in middle market and boutique, it's going to be making sure you let them know that you're kind of more interested when you talk to the boutique or middle market fund. Let them know that you're kind of more interested in more responsibility. The bulge bracket feels a little bit bigger, and you think you work better in a smaller team, and you want to be involved in the modeling earlier on in your career, help run a deal from start to finish earlier, blah blah blah. All the reasons you give comparing boutique experience versus a bulge bracket experience, where there's larger deal teams, sometimes less responsibility for the analyst and whatnot. So that's what you can tell the middle markets and the boutiques, and they like to hear that. So in terms of the sales and trading and converting it, you got to be able to say like, hey, whatever the middle market boutique specializes in, hey, I'm really interested in M&A or I'm really interested in restructuring. And notice you guys have a very strong M&A practice or restructuring practice. And more specifically, I did sales and trading, or I'm in the middle of my sales and trading internship, and I think it's really interesting, but I really think my interest lie more with restructuring. I was hoping I'd be able to get in a process with you. I know obviously you guys have your own interns, and so I think this transition might be a little bit easier in like a better year. This year it's going to be pretty tough because just the offer rates for their own interns are going to be lower. So my guess is like they're going to get most of their yield from the interns, meaning let's say a middle market bank has 20 interns and they're only looking for like 12 analysts. They're going to offer maybe 13 or 14, give 13 or 14 offers. And from those, unless the yield is really low for that, like they're probably going to fill most of their class with those people. So it's tough to go from one internship to the other because of that. So when it does happen, the only time it does happen is if you get your full-time offer at the top BB, and then you're willing to kind of go pretty far downstream, and then you're in touch with people at the lower middle market bank saying, it really interests me. I hope I can get into a process, and like you're talking to the right people at the right time. So as that near the end of summer approaches, they know that you're still very interested. And that's kind of when the time you got to strike fast to try and make sure you're in the conversation of, if let's say they had a kind of a weaker intern class and you continue to express interest, I think that would be a possibility. But I'd put the odds of that pretty tough. I'd say like for an average person, I'd say it's like a 20 to 30% shot if you're putting in the work. If not, it's much lower than that. But that doesn't mean you can't transition later, and having the top PB on your resume, if that ends up being what you have to take, because we're in a pretty rough economy, then it's not the end of the world. I'd say your first job is just your first job, and people shift and change very frequently in the first 5 years out of school. So it's not something where you're stuck. So you shouldn't feel that way. Here's a LinkedIn user. Interesting question. I tried to break into IBP from a non-target school. I was unsuccessful. It's been about 2 years. I wanted to know if getting a certificate in VC PE through Columbia would help boost my chances of being able to break into PE. Good question. I'd say very marginally, not really. I'd say what's going to be more important whether you're on your chances of being able to break into PE is like, what have you been doing over the last 2 years? Have you been working, and what have you been working in? And if you weren't able to break into IB, the odds of you breaking into PE are even lower. So hate to be a Debbie Downer today. Let's see what else. Am I missing some comments here on Insta? How old is too old to break into IB as an associate? People will tell you you're never too old. I'll tell you, if you have gray hair like me, you're probably too old. No, honestly, I think how old is too old? If you're coming out of an MBA, it really doesn't matter. But if it's like an executive MBA, it's going to be a little bit strange if you're like well over like mid 30s. It starts getting a little bit too old to come in as a post MBA associate. Most MBAs are graduating between 26 to 30 years old. Say average probably about 27, 28 years old. So that's like most of the associates are going to be coming in at that. You can be like several years older. You could be 31, 32, not a big deal. If you're like a career changer, you did other things. You could even be 34, 35. I think you start getting over that. I think the bank might have some concerns over you being able to take direction from a VP that might be a 29-year-old VP or a 30-year-old VP. So like it starts getting a little bit odd if you're like 40 and someone's, but like, honestly, they're never going to say it's an impediment. I'm just saying like what's too old. It starts getting harder on the margin. I'd say probably around 35, 36. And as you get older, no banks will admit that, but I think that's the truth. Yeah, like 70 years old would be pretty strange to be seeing an associate, to being an associate interview. Let's see what else we got here from Insta. Is there a big variable salary policy like bonus and asset management? Typically, no. Most of your money from asset management comes usually from like your AUM or like the book that you're actually running. So like you'll get some percentage of that, and depends on the structure of your firm and what type of asset management you're talking about. How old is too old to break in? We talked about that. Do you think there's more money to be made in Switzerland or in the UK? I don't know about Switzerland, but I know the UK compared to the US has pretty low pay for finance roles. Do I think that AI will replace most junior roles in investment banking and private equity in the next 5 to 7 years? Good question. I do not think it will replace most junior roles. I do think it may put a little bit of a, as analysts and associates get better and firms get better at leveraging these tools, I do think it will put a little bit of a dampening of the need for expanding the class size. But given that it's sell side, there's always more work to do. There's a reason the hours are so long. So I think if anything, it'll just make things more productive, and it'll make pitching easier, which means more pitches, which means more documents, which means more work. I think it's just going to increase the velocity of the work that's coming through. It's kind of similar to how like people used to do like spreadsheets on like Lotus Notes, and like before they even had spreadsheets, it was like a lot of hand, like just crazy things you couldn't even imagine like 30, 40 years ago. And like when Excel came around, it was like, oh, the analyst classes are going to shrink. No, the analyst classes got bigger and bigger and bigger. It just made the velocity of deals and the velocity of pitches just go through the roof. And I expect that to happen with AI. Yeah, that's what I'd say about AI. I don't think it's like a job eliminator. I think it's a job enhancer for now. It's getting kind of scary good though, where there is definitely some concerns long term in terms of the amount of work it could do. If you're not specialized, if you're not, if the thing it can't do is like meet people face to face, build a relationship, build trust. So I still think at the higher levels, there's less pressure than there is at the processing levels. Like it's going to put a lot of pressure on jobs potentially if it accelerates really fast. If you're just doing process work or content generation work, but even now a little bit of strategy work. So I think it definitely is going to change a lot of things. I just don't think it's going to like replace the jobs, because I don't think the firms will move fast enough to actually implement them all. If you're talking about startups, Silicon Valley, maybe a little bit faster. I know it's helping developers write cleaner code faster. So there's that. What do I think of lateraling at the analyst level in this market? Hey, Matt, I think it's going to be really tough. There's going to be a lot less seats open. People are getting fired. So that just means there's a lot of people looking for any role. So I think in that sense, it's going to be a really tough lateral market. It's going to be a tough market in general. Lateral, intern to full-time conversion rates across the board. Private equity recruiting, again, is going to go super early and make all of your lives, if those of you that are going to banking, stressful. If you can wait till that second year, I very much recommend that. Unless you're ready. If you're ready, go. Age shouldn't matter at all. I agree, Pizarro. Does back office experience help moving into investment banking? No, it probably hurts you. The U.S. elected an 80-year-old president. You have. I'm not arguing with Pizarro. I agree. Age shouldn't matter. What is the ideal recruiting timeline for a December graduate? Ideally, you're able to do some internships during the year so that you can talk to the bank and be like, hey, can I start in, February, March, April? Ideally, they have enough deal volume where they want you to start. But recruiting timeline, ideally you have an internship, at least one strong internship in what you want to do a full year before, or at least the summer before. If a December graduation happens and you had the internship the summer before and they don't want you to start to the following summer, I mean, enjoy those 6 months. Don't feel like you have to fill it. If you have the locked in full-time offer coming for the 6 months after, enjoy those 6 months. You're going to be working really hard when you start. So don't go crazy and go on like a bender and start getting into all this debt. But do enjoy that time, because I think it's, once you do start, it's at most places it's a pretty rough go. So we actually that reminds me, we are releasing an investment banking work conditions survey probably next week. It's our 3rd annual survey on this, and it takes a look at like number of hours worked by firm, trends from year to year on like mental health, how much is deteriorated, which firms have seen have been improving the most on work-life balance, stuff like that, which ones are still struggling to give their analysts and associates a decent work-life balance. So that's going to be released probably next week. So stay tuned for that. Maybe I'll even review it here on live once it comes live, or once it's out. Oh, other thing, we released oil and gas modeling course. It's live on the site. And obviously I mentioned last week, WSO Academy is live. WSO Academy is a program for mostly freshmen and sophomores looking to break into investment banking. We look at, it doesn't matter if you're from a non-target or target school, we're looking for people who are really just motivated. And the reason we like freshmen and sophomores, or even high school seniors, is it's going to give us more time to work with you to improve your chances of breaking in. And in terms of guaranteeing an offer, if we work with you, we accept you, we do guarantee an offer in IB. So that's a nice part about it. It is hard to get in, but if you do get in, we do provide a guarantee on that. So that was a question that came from, a question from IG. Somebody asked if, do you guarantee an offer if I graduate from a non-target school with a 3.5 GPA? Well, we would look at that and we would determine like, hey, what have you been doing since then? What's going on, and whether we could offer that to you or not, or whether we could accept you in the program. If you want to check out that, go to wallstreetoasis.com/academy. The waitlist is open right now, so you could drop there, and we're opening applications on a rolling basis. We had a lot of applications this past week come in for the next cohort. So no promises that we can get to you right away, but ideally we're in the next few weeks, we'll be kind of very busy with calls and interviews and stuff like that. But my guess is the next cohort will probably start in early June, late this month, early June, depending on how that goes. So what else we got here? Raising for family, friends, real estate project living. Do I think there's a market to provide moral encouragement for folks trying to break into the industry? Hey, Asfund, I'm not sure. I think motivational speakers serve a purpose. I think getting people fired up and motivating them to try and break in, for sure. I think there's a market there. It's just a question of how big is that market, and I'm not sure what your question's getting at. Somebody said better to be a plumber nowadays, I guess. How do I think the market will impact 2024 MBA associate recruiting? I think on the margins, there's just going to be less offers for post MBAs. So I think it's going to be a little bit more competitive than most years. 2021, I think there was a lot of the summer associate classes and the intern classes were huge because the amount of deal flow coming through was just insane. So I think now that we've seen M&A volume dry up, almost get cut in half from 2021 to 2022, and then again this year it's looking pretty weak. I think it's going to show up in both full-time or intern to full-time offer conversion rates, summer associate offers. All that stuff is just going to be down significantly. My guess, close to like 30 to 40% down based off that. But that's based off super highs in 2021, so it's not as if it's going to be zero. Is it okay to be a 28-year-old first-year analyst in IB? Yeah, I don't know why not. There's people who are kind of have done like valuation work at a big four and they decide they want to go into investment banking a little bit later. 28 is on the older side to be a first year analyst, but if you can do it, like who cares? And if it's what you want to do, I think the harder part is once you're 28, are you starting a family soon? Are you starting? And so like if that is really hard. So if you're trying to start a family and you're an analyst, you better have a very understanding spouse and go in with like 100 warnings and have a game plan on how you're going to manage things and what the expectations are. Let's see what else we got. A couple more. Will ARK ever come back? Kathy Wood, it's an interesting question. We'll see. We'll see what happens with inflation in the Fed. Kind of a big week. Was the hike a bad decision considering how the banking sector has taken a hit? I would be at the camp that unfortunately the Fed was kind of put in a place where there was no really good decisions. I think the worst situation is they don't hike. They don't hike, and then inflation rears its ugly head again, and then we're kind of in for a real ton of pain. If they can keep the trend going down, and some of the signs are pointing that it's not coming down quite fast enough in the latest readings from what I think I read. So I think that the quarter point hike that I think is needed. So let's see what else we got. So in terms of mentoring, somebody asked a question about mentoring. We have over 1,000 mentors. If you're looking for one-on-one advice, starting at like $37 for a 30-minute session. You know, some of these other platforms are trying to gouge you guys. We make no money on the mentoring sessions. Most of the fee that you pay goes to the mentors, and these are Wall Street professionals. So if you want to look at that, I'd highly encourage it because it's the most cost effective. The reason we do it so cheap and at no margin or very low margin is because we know that people use it, then they love it, and then they love Wall Street Oasis and they love the community. So like they come back and they end up purchasing interview courses and financial modeling training courses, which we have on the site, and that is higher margin for us. I think we're gonna call it there. Did I miss anything, Amir, in terms of other stuff that you're seeing?
I think then a bit of questions there.
Hey, Federico. So the question is, what is the best way to transition from consulting to banking in the current market conditions? Any suggestions on specific teams, divisions to strategically target? I would target, depending on the types of engagements you worked on in consulting, I would target groups that have related transactions. That's probably going to be your best bet. But I wouldn't try to get so strategic that you get narrow in your focus. In this market, it's going to be a numbers game. It's going to be making sure you know the right people, get in the right processes, and then nail the interviews. And so consultants are going to be, you're going to have the stereotype against you that you don't know how to model, you don't know how to do that stuff. So make sure you're really strong in the technical side. And then why you're switching, why do you want to switch? If you've been doing consulting for a few years, I think it's an easier transition. If it's like you're 6 months in on the consulting gig, it's going to be a hard sell because they're going to worry they're going to worry that you'll bounce too fast. Let's see what else we got here. Kenny asks, any advice for full-time private equity recruiting at undergrad? How does the PE analyst market look this year? Hi, Kenny. Good question. So the PE analyst market is less impacted overall by the overall moves of like the stock market and the economy, simply because this AUM stuff is locked in, their revenue is locked in, their carry and stuff. You're probably not going to see big growth over the last few years, but they're in terms of the overall market and the number of seats, it's pretty consistent. Although I'll say to get a private equity analyst role is incredibly competitive. So to be even offered a chance to interview should be seen as a huge accomplishment. So I think in that sense, advice for full-time PE recruiting at undergrad is basically making sure you know when those are kicking off, talking to the right recruiters, and trying to make sure that you're in this process, because they happen basically in secret. People don't really know who they're contacting, and it happens relatively early as well, similar to banking. I think I'm gonna call it, guys, before I lose my voice, because I got a lot of talking today. But thanks to everybody for joining. I'll try to do this again, hopefully earlier next Wednesday, more like noon Pacific, 3 o'clock Eastern in the US. And that's all for now. But thanks to everybody for joining, and hope you guys have a great rest of the week. Talk soon.